There's a secret that separates billionaires from ordinary people, and it has nothing to do with luck or inheritance. The wealthiest investors on the planet have built systems that work while they sleep, generating money day after day without them lifting a finger. This isn't get rich quick magic. It's a proven, methodical approach that's been quietly turning modest amounts into massive fortunes for decades. Let's uncover the silent wealth building system that smart investors use to transform their financial futures. The world watches these individuals and sees overnight success, but the truth is far more interesting than that. The forgotten power of compound growth. The foundation of every billionaire's wealth building starts with understanding that time is their greatest asset, not their enemy. When an investor plants seeds of capital into the right investments, those seeds grow exponentially. Warren Buffett, one of the world's greatest investors,
business, and they're learning all these complicated formulas and all that. If they just learn to communicate better.
Cola and American Express, holding them for generations while dividends poured in. Instead of cashing out these dividends, Buffett reinvested them back into more shares, creating a snowball effect.
I knew I could have a good time, and I liked investing, and I didn't really feel I could read the books.
Over time, this strategy turned billions of dollars into the foundation. Truly pays off. The magic lies in letting money make money. When someone invests $10,000 at a 7% annual return, they earn $700 in year 1. But in year 10, they're earning significantly more on their larger total investment. In year 30, the earnings have grown dramatically without any additional effort. This is compound interest, and it's the most powerful wealth-building tool available to any investor. And there's legitimate reason for that assessment. Strategic investments to compound over decades, resulting in a net worth exceeding $200 billion. He deliberately chose to reinvest profits back into company expansion instead of taking them as personal income during Amazon's early decades. The system works because most people think in months and years, while billionaires think in decades. They make decisions today that benefit them 30 years from now. They're not looking for quick returns, they're building infrastructure that generates wealth automatically. This patience separates those who accumulate wealth from those who chase it. Understanding this fundamental difference is the first step toward building genuine financial independence that lasts generations. Building multiple income streams that never stop, smart investors don't rely on a single source of income. They create a diversified portfolio of assets, each one generating money independently. This is the critical difference between wealthy individuals and those living paycheck to paycheck. Dividend-paying stocks are a cornerstone of this approach. Companies like Coca-Cola have raised their dividends for over 60 consecutive years, demonstrating rock-solid stability. When an investor owns shares in such companies, they receive regular cash payments simply for being an owner. Over time, these payments increase without any work required. Someone who bought Coca-Cola shares 30 years ago is now receiving dividend payments that have grown substantially, providing retirement income that automatically increases annually. Real estate represents another powerful income stream. When someone owns a rental property, tenants pay rent every month. After accounting for expenses, that money becomes pure passive income. The property often appreciates in value simultaneously, creating wealth on two fronts. Building wealth through property appreciation while collecting rental income. His portfolio includes properties in Beverly Hills, New York City, all locations where real estate appreciation compounds dramatically over decades. Bond investments provide another avenue. Government and corporate bonds pay interest regularly, offering steady returns without the volatility of stocks. High-yield savings accounts and certificates of deposit offer guaranteed returns between 4 and 5% annually. Some investors earn between $400 and $500 per year on every $10,000 invested. Others invest in business ownership, partnering silently in companies where profits are distributed to investors without any operational involvement. These silent partnerships require no daily work but generate consistent cash flow. The genius of this system is diversification. When one income stream fluctuates, others remain stable. A real estate downturn won't devastate someone who also holds dividend stocks and bonds. This reduces risk while ensuring money flows from multiple directions. Built an entire investment philosophy around this concept. He advocates for holding at least 15 uncorrelated assets to create what he calls an all weather portfolio that performs well regardless of economic conditions. This approach enabled his hedge fund to grow by 9.4% in 2008, while the average fund lost 19%, and the broader market dropped 37%. When these streams are established, the investor enters a phase where their money works harder than they ever could. $1,000 in dividends buying more shares, rental income purchasing additional properties, and bond interest compounding year after year. The system becomes self-reinforcing and increasingly powerful with each passing year. The discipline of reinvestment and long-term thinking, many people earn passive income but make a critical mistake: they spend it. They treat dividend payments like salary, spending the money on immediate gratification. Smart investors do the opposite. They reinvest earnings back into the system, accelerating growth exponentially. That wealth comes from retained earnings being reinvested to build earning power. His strategy involves identifying undervalued businesses with competitive advantages, buying them at discounted prices, and holding them indefinitely. This approach has delivered returns exceeding 9% annually since 1965, vastly outperforming the market average. The discipline required is significant. When someone owns shares paying 8% yields, the temptation to spend that income is strong. The rich don't fall for this trap. They see reinvestment as their path to exponential growth. A single reinvested dividend in Coca-Cola shares decades ago would have multiplied into thousands of shares today, generating income levels most people only dream about. He has consistently emphasized that long-term thinking beats short-term gains. He deliberately avoided profits and reinvested everything into Amazon's growth for nearly 2 decades. While competitors focused on quarterly earnings, this approach required discipline and patience, but the results speak for themselves. Tax efficiency plays a role here too. Smart investors use tax-advantaged accounts like traditional IRAs and strategic investment vehicles that minimize tax drag. They understand that keeping more of what they earn accelerates wealth building. Every dollar saved in taxes is a dollar that can be reinvested immediately. The silent system, setting it and forgetting it. Once the system is constructed, magic happens. An investor can literally go on vacation for weeks while money accumulates. Dividend checks arrive automatically. Rental income deposits without intervention. Bond interest compounds silently. No active work is required because the infrastructure operates independently. This is what separates passive income from active income. A salary requires trading time for money. Every day off costs money. But passive income flows continuously regardless of whether the investor is working, sleeping, or traveling. This is true financial freedom. The time investment happens up front. Someone must research investments, understand markets, and make informed decisions about where capital goes. This requires reading, thinking, and learning. He emphasizes that knowledge compounds like money does. Every investment principle learned improves future decisions. Ray Dalio similarly advocates for deep thinking about economic cycles, market dynamics, and risk management. He built his wealth by truly understanding how the world works and making decisions based on that understanding. His all-weather portfolio strategy was developed through years of observation and analysis, not through luck or guesswork. Once that knowledge work is complete and the system is established, the investor experiences freedom. Money arrives consistently. The portfolio grows through market appreciation and reinvested earnings. New income streams are added strategically without overwhelming the owner. Within years, passive income can match or exceed what an ordinary person earns from a job. The beautiful part is that this system scales. Whether starting with $5,000 or $500,000, the principles remain identical. Time, compounding, diversification, and reinvestment create exponential growth. It takes longer to reach financial independence starting small, but the trajectory remains the same. Smart investors understand that building wealth silently is superior to chasing it noisily. They focus on systems that work automatically, on assets that generate income without supervision, and on strategies that benefit from the passage of time. This patient, methodical approach has created more billionaires than any other wealth-building method in history. The silent system doesn't require inheritance, luck, or exceptional talent. It requires only an understanding of how wealth actually works and the discipline to let that system operate for decades.